Hi everyone, and thank you so much for watching my channel, The Witty Turtle. In the last class, we started other deductions under section 36, right? And in the last class, we completed four kinds of deductions. The first one was under section 36, subsection 1, clause I, which speaks about premium of insurance for stock in trade, right? The second deduction was what? It was under your section 36 subsection 1 clause IB, which speaks about premium of insurance on health of employees. The third one was bonus or commission paid to the employees, which was under section 36 subsection 1 clause 2. And the fourth one was under section 36 subsection 1 clause 3, which speaks about interest on borrowed capital. So in today's class, we are going to start with discount on zero coupon bond. Discount on zero coupon bond, right? And this is mentioned in your section 36, subsection 1, clause 3A. Okay, clause 3A. So, before going into the section, first we will understand what is zero coupon bond. As the name itself suggests, zero coupon, that means the coupon rate or the interest rate is zero in case of zero coupon bonds. Okay, so here first we will understand what do you mean by discount, right? So discount is the difference between the amount payable to the holders on maturity minus amount received from the holders while issuing the zero coupon bond. Okay, for example, Anvesha Limited is a company, and Anvesha Limited is issuing some zero coupon bonds to the customers. Okay, so the amount at which Anvesha Limited is issuing zero coupon bonds, that is, for example, 80 rupees, right? And the amount which is payable to the holders on maturity, or we can say the face value is 100, right? Issued at 80 and it is on maturity, the face value is 100. Then in this case, the discount will be how much? 100 minus 80 equals to 20, right? So basically discount is the difference between amount payable to the holders of zero coupon bond on maturity minus the amount received from the holders at the time of issuing zero coupon bonds, right? Understood? So according to this section, this discount on zero coupon bonds is allowed as deduction in equal installments over the entire life period or over the entire tenure of that zero coupon bond, right? On the screen you can see this example which says zero coupon bond issued on 17th of October 2023, right? 1 lakh zero coupon bonds are issued, and it is issued at 80 rupees per bond, right? And the life of bond is 12 months. The redemption price, or जो हम लोग बोलते हैं amount payable to the holders on maturity, that is your face value, that is your 100 rupees. Okay, so in this case you have to calculate the deduction. So now you must be thinking, as the zero coupon bond is issued in the middle of the month, right? So how to calculate the tenure in this case? So for that, another rule is given. The prescribed the in what manner it should be calculated, that has been prescribed in the rules. It says that the life of bonds is converted in calendar months. Okay, if the life is given as 1 year, then it will be converted into calendar months as 12 months, right? Or if it is given as 1.5 years, then it will be converted into 18 months, right? So it says the life of bonds is converted into calendar months. Ye kahan likha hai? This is written in the rules. If any calendar month part is 15 days or more, if any calendar month is of 15 days or more, then in that case it should be treated as one calendar month. If in any month the zero coupon bond is held for more than 15 months, more than 15 days or 15 days, then it is treated as 1 month, right? So in this example, see, it was issued on 17th October, right? So in the month of October, how many days it has been held? It has been held for 15 days, right? And as it says that the life of bond is 12 months, so the maturity of the zero coupon bond will be on 16th October 2024 in the next year, right? So again the next year October, for how many days it has been held? For 16 days, up to 16th of October, right? So now you have to convert this into calendar months. So October, in the first October, like October 2023, for how many days it has been held? 15 days, right? So it will be treated as one calendar month. Then again November, December, January, February, March, April, May, June, July, August, September. So these are how many months? These are a total of 11 months. And October 2023 is considered as one more month. And coming to the last October, that is your October 2024, in that month also it has been held for 16 days. So again it will be treated as one more calendar month, right? So how many calendar months you have to calculate the discount? It will be for 13 months, right? Now tell me, what is the total amount of discount here? The total amount of discount is 20 rupees per bond, right? 20 rupees per bond, 100 minus 80 equals to 20 rupees as discount. And how many bonds were issued? 1 lakh bonds were issued. 20 rupees into 1 lakh, which equals to 20 lakhs rupees. 20 lakhs rupees is the total discount. So you can calculate the monthly discount simply by dividing it with 13. Why? Because we have 13 calendar months. So 20 lakhs divided by 13 months equals to the amount, and this amount is for 1 month, right? So you have to calculate the deduction for previous year 2023-24. So for 23-24, for how many months it is being held? October, November, December, January, February, and March, for 6 months. So whatever amount you got, that is your 1,53,846 multiplied with 6 months, right? So it will be equal to your 9,23,076 rupees, right? So this way you can calculate the deduction for zero coupon bonds, right? Which says that discount will be allowed as a deduction in equal installment over the tenure of the zero coupon bond. I hope this is clear to you, right? To understand the next concept, let's go back to the salary chapter which you studied in your intermediate, right? So we know that there are some funds for the employees, like your statutory provident fund, then your recognized provident fund, superannuation fund, etc., etc., gratuity fund. So for every fund, there is a certain percentage of amount which is being contributed by the employer, and also there is a certain percentage of amount which is being contributed by the employee to that fund, right? Employer थोड़ा contribute करता है, employee भी थोड़ा contribute करता है to that particular fund, right? So the next 3 sections, they speak about the company can claim deduction for which all funds. So simply look at the diagram which I have put on the screen. It says that the employer contribution is divided into 2 parts, right? Look at the right hand side diagram. It has only 3 aspects, right? 3 items which we will study further. But now we will focus on only the 6 items which are given in the left hand side, which says that employer's contribution is allowed as a deduction only in these 6 cases. Okay, now look at the first thing. The first one says RPF. What is RPF? Recognized provident fund. Recognized provident fund. And the second one says SAF. So this is your approved superannuation fund. Approved superannuation fund. So any sum paid by the employer into RPF or approved superannuation fund, so in that case what happens? It will be allowed as deduction. But the amount of contribution given by the employer is limited. It is limited to the limits prescribed by the recognition of the provident fund. Whichever provident fund it is, there must be some limit set up for this. So it should be limited up to that particular limit which is given by the provident fund. And the second point says that it should have the approval of the superannuation fund which is accorded by Chief Commissioner or Commissioner of Income Tax, right? So the superannuation fund must be approved by the Chief Commissioner or Commissioner of Income Tax, right? What are the two conditions? The first condition says that it must be within the limits prescribed by the recognized provident fund. The second point says it must be approved by the Commissioner of Income Tax or Chief Commissioner. Now in this case what happens, the section 43B is again intervened here. So there's a intervention of section 43B which says that it is allowed as deduction only if it is paid up to the date of ITR filed, up to the date of ITR filed, right? Now the next point says that, okay, so this was mentioned under which section? Section 36, subsection 1, clause 4. You don't really need to remember all the clauses. You can simply write it as section 36, subsection 1, right? So the next section says that, the next section, that is your section 36, subsection 1, clause 4A, it says that if any sum is paid by the SSC or paid by the employer by way of contribution towards new pension scheme under section 80 CCD, right, then it will be allowed as a deduction, but it should not exceed 10% of the salary of the employee in the previous year, right? So this 10% wala thing is applied on what? It is applied on the amount paid as the employer's contribution. The employer's contribution should not exceed 10% of the salary of the employee in the previous year, right? And in this case, the salary includes only the DA or the dearness allowance, which is having your retirement benefit, right? So basic plus plus DA having retirement benefit. So बाकी जो भी your allowances and perquisites, those are not included, those are excluded. Okay, so it simply says that new pension scheme referred under section 80 CCD, it is allowed, and the maximum is what? 10% of the salary of the employee in that particular previous year, right? Now the next point says that approved gratuity fund. Approved gratuity fund. So any sum is paid by the employer by way of contribution towards the approved gratuity fund, which is created by him for the benefit of his employees under an irrevocable trust. Under an irrevocable trust. So in that case, what happens? Again, it is allowed as a deduction, right? So till now we studied about four things. The first one is your RPF, recognized provident fund. The second one is your approved gratuity fund. The next is your approved superannuity fund. Then the next is what? The next is your new pension contribution of employer for new pension scheme under section 80 CCD, maximum limit up to 10% of the salary. And so these four things we studied. Apart from all these four things, again there are two more things, right? So what are those two more things? The first one is your SPF or statutory provident fund, and the last one is any other fund under any other law, right? So these 6 kinds of employer's contribution is allowed as deduction, right? But in this case also, in these 6 cases also, again section 43, there is an intervention of section 43B, which says that it is allowed only if it is actually paid up to the due date of return filing, right? Up to the due date of return filing. I hope this is clear to you. I know this is a bit difficult to understand, but yes, after watching this video, if you will go and read this particular thing from your book, then I'm sure you'll be able to understand this thing very nicely. Okay, so that was it for the video, guys. I really hope you have understood whatever we studied today. So what was the first thing that we studied today? The first thing was your discount on zero coupon bond, and the second thing that we studied is employer's contribution for your RPF, SPF, superannuation fund, approved gratuity fund, NPS, and lastly any other fund which is recognized under any other law, right? So these things are allowed, and the and three things which are not allowed, that will study further in your section 40. Okay, so again, whatever is allowed, that they are subject to your section 43b, which says that it is allowed only if it is actually paid up to the due date of return filing, right? I hope this is clear to you, and I really hope that zero coupon bond wala concept is also clear to you. In the next class onwards, we will study about employees contribution, and animal wala wo jo chota sa section hai, that we will understand, and we'll jump to a very important section, that is your bad debts, right? So yes, if you find this video helpful, then please hit the like button, subscribe to my channel, the Witty Turtle, and also don't forget to hit the bell icon so that tomorrow you'll be notified when I'll upload a new video. And don't forget to share this video with your CA and CM final friends.